Welcome to another edition of Morgan's Edward Street End of Week Wrap. Fewer than usual corporates exceeded market expectations this reporting season, with notable large cap misses from the likes of Telstra, Suncorp, Ramsay Health Care and Woolworths being a concern. Corporate outlook statements were again broadly cautious, reflecting several uncertainties in the economy. It's not all gloom though, as Matt will allude to shortly. As always, please note that our comments are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the following stock recommendations suit your personal needs and objectives. I'll now pass over to Matt for his summary. Matt?
Thanks, Brad. It's been a tough week for our market, trying to keep its head above 5,700 points as the overall risk element rises in many sectors. The banks continue to be soft, with CBA announcing that the AUSTRAC inquiry won't be resolved until April next year. This is likely to weigh on sentiment in the space for some time, with Macquarie Bank also starting to get the wobbles as investors move out of the sector. Late yesterday, we have seen news coming from the WA budget looking to increase gold royalties by 50% and payroll tax for the big miners, which is likely to be strongly opposed, but doesn't help the recent strong run the mining sector has had. In the retail space, I've been reading about Aldi increasing market share and rolling out more stores and improved margins, which together with Amazon hitting our shores before Christmas will make conditions a little tough in that space as well. But I must admit, this has to be almost factored in the share market by now. Lastly, we all know by now how the telcos have been going, with Telstra reaching $3.51 recently and Vodafone potentially listing on the market in the future. By now, you're probably thinking I'm in the bear camp, which is not the case, as the optimist in me sees opportunity whilst prices are low. There are many ways to take advantage of the above hate trades with the guidance of your friendly advisor. For me personally though, I'm cautious on the US markets at the moment, with jobs data coming through weaker overnight, sending the US dollar lower, and as a result, the Aussie is now moving up closer to 81 cents. With all the uncertainty stemming from North Korea and the sectors discussed earlier, I think it's a great time to revisit gold stocks. Gold has spiked to almost $13.50 overnight as traders continue to hedge portfolios against a weak US dollar, and I think most investors are underestimating the potential in this precious metal. We've already seen copper make a bullish break, moving up 25% since May, and gold could be the next to follow, so keep an eye on gold. I'll let you discuss with your advisor which is their favourite play in the space, but at the bigger end of town we have Newcrest Mining, Evolution, Northern Star and Saracen, all with market caps above $1 billion. Cheers, Brad.
Thanks, Matt. On my left, we have Cameron, who will run through his key pick stock for the week. Cameron?
Thanks, Brad. My buy idea this week is an ingredient you'll find in every true Australian pantry, and that is Capilano honey, ticker code CZZ. Capilano honey is 100% pure Australian honey sourced from over 600 loyal beekeeping families across Australia. Free from additives, preservatives and refined sugars, Capilano products have been domestically sought after for over 60 years with an ever-increasing international demand. Capilano reported their full year results in August, which in my view reported a par performance for FY17. However, FY17 was a year of investment, and as such we believe this should place the company in a favourable position for future growth over the next 12 months. We believe this financial year will provide significant opportunity for Capilano, with a strong focus on exporting to China for premium and higher margin products. These include Manuka, Jarrah, Biotic and apple cider vinegar. Our agri-food and travel analyst, Belinda Moore, believes FY18 could be one of the largest supply years in recent history, coming off a year of unfavourable seasonal conditions. Trading on a PE of 13 times FY18, we believe this growth story is attractively priced at $16. Our analyst has a price target of $18.05, which represents 13% upside and an ad recommendation. Thank you, Brad.
Thanks, Cameron. Please note that applications for Magellan Global Trust IPO are due on September 22nd and the 27th of September for the priority offer. Stocks of interest going ex-dividend as Caltex and Motorcycles on Monday, CSL and Ingham's on Tuesday, and Brambles and Adairs on Wednesday. Well, that wraps up another edition. Please feel free to share this video with any colleagues or friends, and hop onto Facebook and like the Morgans Edward Street stockbroking page. Have a great weekend.